Yo, what is going on YouTube? I am Germ here, as you guys can see up on the screen. Today I want to talk a little bit about Sofi Technologies Incorporated. This is ticker symbol SOFI or Sofi. For those of you who are maybe not as familiar with this company or with this stock. And you can see on the screen lots of green. Today was a very, very good day for SoFi. 3.79% up on the day, 22 cents up to 588. At least at the time that I'm recording this video, right around 4 o'clock Eastern, right in that time window. So that's good. The whole market was pretty green today. Dow Jones up 0.69%, S&P up 1.09%. NASDAQ up 1.87% and the Russell up 0.96%. So yes, the markets were green. Everything was green. SoFi is green, but SoFi did outperform all the major indices as well. Of course, being up 3.79%. You see here, nothing's at even 2%. So that's good. SoFi definitely has a lot of outperforming to do going forward in the future if they want to continue, to make a case to be worth a worthwhile investment, especially after heavily underperforming the markets throughout most of, if not all, 2022. But so far so good this year for SoFi, up 27.66% in the past month. That's 30.78% year to date. This was 7.78% on the week. We're getting closer and closer to the end of January, but at least this Monday, starting off this week, very, very strong. As like I said, all of 2023 has been rather strong so far, which is interesting. But of course, as always, we have plenty of stories to talk about, so let's get into it. This first one from Yahoo Finance. This is, will SoFi report negative earnings next week? What you should know. So obviously the earnings next week are going to be a big deal, not only to hear how the end of the last quarter went, the end of the last full year went, but also to hear what their guidance is going to be, what their future outlook is going to be for the next quarter, and really all of 2023 is what I'm going to be most curious about, and I know a lot of other people are going to be curious about as well. So, Wall Street expects a year-over-year increase in earnings on higher revenues when SoFi reports results for the quarter ending December 2022. While this widely known consensus outlook is important in gauging the company's earnings picture, a powerful factor that could impact its near-term stock price is how the actual results compare to these estimates. The earnings report, which is expected to be released on January 30th, 2023, so next Monday, I believe it is pre-market on Monday. The earnings are supposed to be coming out. Might help the stock move higher if these key numbers are better than expectations. On the other hand, if they miss, the stock will move lower. Here is the Zacks consensus estimate. The company is expected to post quarterly loss of $0.09 per share in its upcoming report, which represents a year-over-year change of plus 40%. Revenues are expected to be $425.7 million, up 49.1% from the year ago quarter. The consensus EPS estimate for the quarter has remained unchanged over the last 30 days, essentially a reflection on how the covering analysts have collectively reassessed their initial estimates over this period. Earnings whisper, sometimes these can offer clues and stuff, but it does seem like, hey, things aren't changing too much. So, hey, we'll have to wait and see. Obviously we're expecting year-over-year growth for SoFi. Those are what the numbers are coming into this report. We don't really know if this earnings is going to be good or bad. We'll have to wait and find out. And then, obviously depending on that earnings report, that could be a big swing for SoFi in the short term next week, but also give us a better picture of at least what 2023 could possibly look like, or what it's expected to look like. This is going to be a big earnings report next Monday, the 30th, if that's what day the earnings report ends up being, is going to be a big day, and there'll be plenty to break down after that comes out. So I'm excited to see what that has in store. Then we have this post from the SoFi stock subreddit, why legacy banks need SoFi and Technesis. Globally, most legacy banks of all sizes use one of three rather antiquated payment processing apps, which were written back in the 70s and 80s. Engineers who wrote these products are long gone, and their new hires do their best to maintain them. We are talking COBOL and early C. As you would expect, newer engineers' turnover and cost is high, and the new talents do not want to work with old code. In parallel, the number of legacy banks is slowly decreasing and is at best static. Higher costs and lower revenue do not spell a bright future for these companies, so the engineers at these banks are now tasked mostly with the operation of these apps and may at times write a few minor enhancements. Several attempts by major banks at fintech have come at high cost, and most ended in failure. This trend cannot continue, or else demise is certain, at least according to this Reddit user, Wise and Wild. And that is where SoFi's Technesis comes in. It offers brick and mortar banks a gateway to fintech and selected features of all that SoFi offers. Banks only need to build a bridge from their current platforms over to that of Technisys. Other teams at SoFi also participate in the process. In a few months, these banks can offer an upper layer of new services to their customers and with their own brand names. Here, SoFi selects which banks and regions to focus on, in essence, choosing winners in the global legacy banks landscape. As soon as one bridge is completed, SoFi will, in one swoop, gain a large customer base, and specifically those which it may have otherwise missed. The royalty partnership income it will receive in the process will be in perpetuity and will increase over time. What's more, given that most legacy banks use a similar platform, working to port over any future bank will be akin to a copy and paste process, and with increasing ease, lower cost, and quicker time to market, this will result in an accelerated rate of implementation and global expansion. I expect to see news from SoFi in the coming quarters and substantial contributions to the bottom line. So overall, think this is a pretty good breakdown, or at least this user's interpretation of how Technisys, which again is owned and operated by SoFi, is going to be able to be used by SoFi to make hopefully lots of money later on down the line by being able to take advantage of the needs of these kind of legacy financial institutions, which it's weird because these are also SoFi's direct competitors now that they have their bank charter and everything like that. So I don't know how that's going to also factor into things, because they are direct competition, but they also need to work together, which is then going to benefit them, but it's also going to benefit SoFi, which is benefiting their competition. SoFi is helping their competition. I don't know. It's just real weird, kind of roundabout, endless loop or whatever, but thought it was kind of an interesting write-up and wanted to share that with you guys. Someone did ask, why are they still showing up as Bancorp? Almost 1 year later, working with financing, transfers, and other dealings with external banks, we still show up as Bancorp nearly a year after the bank charter. While this is only a weird aesthetic blemish, it can affect refinancing or some transfers because of other banks or companies say, no, we don't work with Bancorp. Any idea when this will be fully resolved? I'm concerned this would reduce usage among customers and erode the perceived legitimacy of SoFi as a real bank. This person just says, hey, it probably has nothing to do with SoFi. It's likely only has to do with the place you buy used from. The clown should update their database. Not every company updates their bank list. Often SoFi can still show up as Bancorp even in 2 years with some companies. I believe Bancorp is the the bank that SoFi absorbed or purchased or whatever to become a bank, get their bank charter done and all that stuff. But yeah, it does still show up as Bancorp. I use SoFi for banking, and yeah, a lot of the stuff still shows up as Bancorp on most things, all things that I use. It is kind of weird. It does, kind of hurt the SoFi brand name and image and stuff a little bit. So hopefully this is something that gets updated, but we'll see. This from Investor Observer: SoFi favors the brave. There's a bulleted list that is pretty lengthy, but we can go over some of these points. So uncertainty in the markets creates huge opportunities for buying the dip. SoFi can soar 25x. I'd be happy with 10x from current levels in the next few years. SoFi is trying to do BAC and WFC, what Amazon did to JCPenney and Sears. The student loan moratorium has hurt SoFi's business in the short term, but the company's robust fundamentals have not changed. Traditional banks are full of profit-taking middlemen that are dependent on account fees, clearinghouses, high lending interest rates, broken digital experiences, confusing reward programs, long phone calls, and in-person appointments. SoFi solves the problem by eliminating the expenses of physical branches and eliminating tons of middlemen while passing on the savings to the customers. They turn the traditional bank's slow, expensive, and cumbersome process into a fast, budget-friendly, and easy experience for frugal customers. And all these other multitude of reasons why this person believes that SoFi is a good purchase at this time in favors of brave, because again, yes, it's hard to buy something that has been down so bad over the past year. We can look and see, SoFi is down 55.79% in the last year, but hey, we are kind of ticking up right here, but we've had these run-ups before, and it's always kind of crashed back down. But hey, you should check out this article over at investorobserver.com if you want to hear more about it. But yes, lots of key points, lots of cool stuff. And then some other big news involving legacy banks. Goldman Sachs being probed for their consumer lending business by the Feds. Federal Reserve probes Goldman consumer business. Regulators looking into whether the banks had appropriate safeguards as it ramped up consumer lending. Again, not exactly the greatest news story, not the greatest thing going on for Goldman Sachs, and what's bad for other traditional banks, depending on who you ask, could be seen as a good thing for SoFi overall, but also, hey, SoFi needs to watch out for some of these things as well, but hey, some competition under fire can never be that bad of a thing. But it's pretty much it for this video today, guys. Hopefully I catch you guys in the next one, but until then, peace.